Is the looming trade war between Canada and US going to halt the real estate market? I don't think so, but it's important to consider these factors. I'm going to be recapping what happened in the market in January and also talking about the tariffs that are pending to impact Canada and what that could potentially do for the housing market. All right, welcome back to my channel. My name is Greg Pierce. I'm a local real estate agent and investor on the east coast of Canada, specializing in the Halifax area. And if you are looking to get more information on the real estate market, or you're considering buying or selling or investing, please book a one-on-one call through the Calendly link in the description below. I'd be happy to have a no strings attached call with you, or prefer to meet for a beer or coffee. I'd be happy to do that too. So if you're looking for a recap of the 2024 year, you can find that in my other videos here, but I'm going to be kicking off 2025 with the January stats. So keep in mind, all of these stats are in the Halifax-Dartmouth region, sometimes called HRM, Halifax Regional Municipality. And these are the stats just for January 2025, because that is what year to date is so far. And these stats are going to be compared to last January, so January 2024. So when you see these statistics, these are based off what we saw January 2024 compared to now, because we always want to match up the same time periods. So last month we saw 260 home sales, which is a 9.2% increase from the same time last year. Again, this is referencing sales volume. This is not sales price. We'll get to that in a minute. But this essentially means that there's more demand and buyers are actively looking for homes despite the winter market. Prices are also on the rise here, which is an important factor, as prices are now at $596,000. That's up 5.1% from January 2024. Homes are also moving faster than they were this time last year. The average days on market is now 28 days, which is 5 days shorter than it was in 2024. And this suggests that well-priced homes are selling quickly and buyers aren't hesitating as much as they were last year. Now, another key factor when we're breaking down the housing market and deciding whether you're a buyer or seller, if this is good or bad news, is months of inventory. I bring this up in every video, but it's important to know that months of inventory is broken down like this. Anything that is less than 4 months of inventory is considered a seller's market. Between 4 and 6 months is a balanced or a neutral market, and anything above 6 months of inventory is a buyer's market. Months of inventory essentially means if you were to take all of the existing listings on the market, how long would it take to sell all of those off if no new listings were added? So currently we are sitting at 3 months of inventory, and that is down from 3.1 months of inventory that we had this same time last year. That means that the market is still a strong seller's market. It is a little bit less than when we saw in earlier years, in 2022, for example, when homes were flying off the shelf. It was kind of the COVID panic FOMO era, but this is still a strong seller's market. It's getting a little bit closer to a balanced market, but we're still a ways away from that happening. So for sellers, what does this mean for you? Now, a lot of times people are talking about the spring market. I'm going to wait to list in the spring. Now, that can be advantageous because typically there are more buyers looking in spring. However, there's less inventory, there's less on the market right now, so you're up against less competition, which means you may have a better chance of standing out or being the chosen home for those buyers that are out there looking. There are a lot of buyers that do not care what the month is, or maybe that they're moving here and they need a home ASAP. It's not always about seasonality, and sometimes following the crowd isn't the best decision. And for buyers, what does this mean? Well, it's still quite competitive, but it's better than it used to be. That's really the best way I can frame this. However, prices that are under $550,000, those are still going very, very quickly, and they're selling fast. They're typically selling above asking price. If you are north of that and your budget is a little bit higher, closer to the $657 or $750 range and up, then you have a little bit more opportunity to be picky and choosy. Sometimes you can get reductions below list price. They're typically sitting on market a little bit longer, so you have an opportunity to be a little bit more choosy in terms of your buying power. Having said that, if you watched my last video, I do expect the market to continue to climb quite healthily, regardless of what's going to happen with the trade war. And I'll get to that in a moment, but I do predict between 5 to 7% appreciation. And I can't stress enough that buying and being in the market for longer is always more advantageous than trying to time the market. It is impossible to time the market. And right now, with interest rates the way they are, I think it is a great time to get into the housing market. possibly on a variable rate mortgage, as it's suggested that there are going to continue to be rate cuts throughout this year. However, we haven't seen fixed rates drop as much because those are tied to the Canada bond yield. So I know this is a lot of information to digest, but if you would like to set up a call, like I mentioned earlier, feel free to do so. I'd love to clarify anything, or leave a comment down below and I'll do my best to expand on what we talked about here today. Now to the tariffs and the trade war. Now, first and foremost, I'm not an economist. I'm not going to pretend to be. However, there are two key factors to consider if these tariffs and the trade war between Canada and US actually comes to fruition. Number one, we've already seen a 25 basis point cut by the Bank of Canada earlier in January. And it is expected that there will be continuous cuts throughout the year. This is only going to be amplified by these tariffs and the trade war. Bank of Canada needs to remain competitive, and they're going to need to offset some of the inflation, and that is going to come as a result of lower interest rates. Now, again, as I just mentioned, that doesn't mean that 5-year fixed rate mortgages are necessarily going to come down, but it does impact variable rate mortgages, not only for existing mortgage holders, but also people that are choosing and deciding which option to go with. Typically, the 5-year fixed rate mortgage has always been the prize choice for Canadians, and it's usually kind of the safe bet. You know every month what your payment's going to be, but sometimes variable is a better option. And right now, I'm not a mortgage broker, but right now I do believe that a 3 or 5 year variable may make the most sense for your decision. Number two, a huge factor that we use when we're analyzing and valuing properties is what's called cost of replacement. That means if you're to knock down a property and build it back up, how much would it cost to do that? So when we look at the new construction side of the market, that often is the driving factor for our property values. And it's no surprise that although we do have a lot of materials here in Canada that are produced for housing, there's a lot that comes up from the United States. So with that extra 25% tariff, or essentially a tax on top of that, that is going to impact the cost of materials and therefore the cost of the home. The builders are not going to be taking a 25% pay cut on this. They're going to raise house prices. I do not think that this is going to come to fruition. You still need to be competitive, and I do think that we supply a lot of the housing materials here. And I truly don't believe that these tariffs are really going to come to fruition. We've already seen the 30-day pause because of the border security. But to be honest, I think this is a bit of a power move by the Trump administration to see what Canada does in reaction. And we've already hit back with 25% tariff threats on some of their goods and services. So these are things to consider as we move forward. It's certainly nothing to neglect or shake a stick at, but it is important to know that this could be an impact for the housing market. I don't think it's really going to derail anything. I don't think it's time to panic by any stretch. And investing in real estate in Canada is still a very, very safe option. So I hope you found this video helpful. Please like this video, tap on the subscribe button, and hit that notification icon so you can be informed anytime I release new content. Thank you so much for tuning in. And as always, I'll see you on the next one.